Hey everyone, and welcome back for another deep dive. Today we're going to be talking about something that honestly I think is on a lot of people's minds.
Yeah.
And it's the market's reaction
Right.
to Donald Trump's
Yeah.
unexpected presidential win.
Unexpected for sure.
I mean, a second non-consecutive term.
Yeah. Talk about a plot twist.
It's crazy, right?
Absolutely. And I think it's really shaken things up.
Yeah.
Trump's victory over Kamala Harris, flipping several states that went blue in 2020. I mean, that's a pretty big deal. And
Yeah, for sure.
believe me, the financial world is still trying to figure out exactly what it all means.
I know, I'm still wrapping my head around it.
Right.
But one thing is for sure, the market is absolutely ecstatic.
Yeah.
We are seeing the Dow Jones just absolutely skyrocketing over 1,000 points
Wow.
the morning after the election.
I mean, that's got to be some kind of record.
To put that in perspective, that is one of the largest single-day point increases ever.
It really is almost like the market is breathing a collective sigh of relief, wouldn't you say?
Yeah.
I mean, remember, leading up to the election, things were so tense, we had this prolonged vote count potential for legal battles.
It was nail-biting.
All of that uncertainty
Oh,
was
wait.
making the market incredibly jittery.
Yeah, it was like watching a nail-biter of a movie.
Right.
And then with Trump's decisive win, all of a sudden that uncertainty has just vanished.
Exactly.
Poof, gone.
Gone. And the markets love that.
It seems like it, yeah.
I was reading actually this quote
From-
from Michael Block, who's the COO of Agent Smith. And I thought this really captured the sentiment really well.
Okay, what'd he say?
He said, the market is breathing a huge sigh of relief.
I love that.
We know.
Yeah. I mean, that's it right there.
That's it.
Markets crave certainty. They hate not knowing what's coming next. And now, at least in the short term, there's a sense of clarity.
Okay, so we have certainty, plus we also have the Republicans sweeping the Senate
Right.
and potentially the House.
That's huge.
So that's got Wall Street buzzing about a very business-friendly environment, right?
Yeah.
Absolutely less regulation,
Yeah.
potential tax cuts, all those things investors love to hear.
But here's the thing.
Okay.
Historically, the U.S. economy and the stock market have actually performed better
Oh, really?
under Democratic presidents,
Huh. That's interesting.
which seems counterintuitive,
It really does.
considering this whole like pro-business image of the Republican Party.
I know, Dana from CFRA research shows that the S&P 500 actually averaged 10% growth under Democrats versus 6.7% under Republicans.
So is this a fluke? Or is there something deeper going on?
That's the million-dollar question, isn't it?
It is.
Could be a correlation, not causation, meaning there are other factors influencing market performance beyond just which party is in power, or it could be that Democratic policies, despite, not always being perceived as quote-unquote business-friendly, might actually create a more stable and prosperous economic environment in the long run.
Okay, so we've got this historical paradox.
Right.
And yet the markets are currently like popping champagne over Trump's win.
They're celebrating.
It just makes you wonder what exactly are investors banking on?
That is a great question. And that's where this idea of Trump trades comes into play.
Okay.
These are asset-specific companies, even cryptocurrencies, that are expected to just flourish under a Trump administration.
So they're kind of riding the coattails of his success, but financially speaking?
Exactly. And some of these connections are pretty eye-catching.
Oh, really? Like what?
So, for instance, Trump Media and Technology Group, the parent company of Truth Social,
Yeah.
saw its stock, which literally trades under his initials DJT,
Oh, wow.
jump over 30%.
Okay, that is almost too perfect.
It really is.
Like it's a scene from a movie.
It's like the protagonist buying stock in the company their rival just took over.
It is, exactly.
Yeah.
So it's not just Trump Media,
No, it's not.
but also things like Bitcoin, for example.
Bitcoin, yeah. It's experienced a significant surge, hitting a new record high. And this is likely linked to Trump's more favorable stance on cryptocurrency
Than Harris.
compared to Harris, exactly.
Yeah. So are investors just thinking, hey, if Trump likes it must be a good bet?
I mean, that's certainly part of it. Remember, during his first term, he was actually pretty critical of Bitcoin.
Oh, really?
Yeah, but more recently, he's warmed up to the idea, even suggesting a strategic national Bitcoin stockpile and a crypto presidential advisory council.
So a little flip-flop there, and now investors are piling in.
It seems so.
It's fascinating how these market movements are so closely tied to personal opinions and political stances.
It is. But remember, investing in anything, especially something as volatile as Bitcoin, carries risks.
Yeah, that's a really good point.
Just because it's surging now doesn't mean it will continue on that trajectory.
And that makes me think about the potential downsides. I mean, not everyone is celebrating Trump's win.
Of course not.
So we got to talk about those who are worried.
Right, and not everyone on Wall Street is convinced that this red wave is going to be this guaranteed win for the economy. Some are very concerned about Trump's economic policies, particularly his fondness for tax breaks and increased government spending.
I've heard that before, but what does that actually mean for the average person?
Well, it means there's a risk that these policies, despite potentially boosting the stock market in the short term, could actually harm the economy in the long run.
Wait, hold on. How can policies that are good for the stock market be bad for the economy? Isn't that counterintuitive?
Well, that's where things get tricky. The stock market is just one indicator of economic health. While it's celebrating right now, there are other signs that maybe things aren't as rosy as they seem.
Like what?
For instance, we've seen a spike in U.S. Treasury bond yields.
Bond yields?
Yeah.
Honestly, that sounds about as exciting as watching paint dry.
I know.
Why should I care about that?
You should care because bond yields are directly connected to things that affect your everyday life, like mortgage rates.
Okay, now you've got my attention.
When bond yields rise, it suggests that investors are concerned about the government's ability to manage its debt.
Okay, so Trump's win is causing bond yields to go up, and that's a bad thing.
It's not necessarily good. Higher bond yields can make it more expensive for the government to borrow money, and that, in turn, can lead to higher interest rates on things like mortgages.
Okay.
And remember, Trump's proposing tax cuts and increased spending, which will add to the national debt.
Okay, so now it's making sense.
Yeah.
So Trump's win might be a party for the stock market right now, but it could also mean higher mortgage rates for folks trying to buy a house.
It's a possibility, and that's just one example of the potential economic risks that some experts are worried about.
So what you're saying is don't get too caught up in the stock market celebration just yet.
Exactly. It's important to look beyond the headlines. Consider the potential long-term consequences of these policies.
Okay, that definitely gives us a lot to unpack. But before we dive into those economic risks, I'm really curious to hear more about those Trump trades. Specifically, how do they actually work? And what are some other examples besides DJT and Bitcoin?
Let's get to that. What's fascinating about Trump trades is that
Okay, so Trump trades are basically investments that are expected to do well, specifically because of Trump's policies or his personal brand. I get the DJT stock and the Bitcoin connection, but what other companies or sectors fall under this Trump trades umbrella?
well, one area that often sees a boost under Republican administrations is the defense industry.
Oh.
Companies like Lockheed Martin, Boeing, Northrop Grumman, they tend to benefit from increased military spending.
Ah, that makes sense. Trump has always been a vocal proponent of a strong military.
Exactly, and during his first term, he oversaw a significant increase in defense spending. So investors are anticipating a similar pattern this time around.
So it's not just about companies that Trump directly owns or endorses, but also sectors that align with his overall policy agenda.
Precisely, and another sector that could see gains under a Trump presidency is fossil fuels.
Interesting, Trump has always been a supporter of traditional energy sources like oil and gas.
Right? He's rolled back environmental regulations and championed energy independence during his first term. So, companies like ExxonMobil and Chevron could see their stock prices rise if he continues those policies.
Okay, so defense, fossil fuels, and of course anything directly tied to Trump himself, like Trump media. It's starting to paint a clearer picture of what these Trump trades look like. But are they really that different from regular investment strategies? I mean, isn't predicting which industries will benefit from a particular political climate just part of the game?
It is, but Trump trades tend to be more focused on short-term gains, often driven by speculation and sentiment rather than long-term economic fundamentals.
So it's more about riding the wave of the current political climate than making sound long-term investments.
In many cases, yes, and that's where the risk comes in. These trades can be very volatile, and they can quickly lose value if the political winds shift.
It's like betting on a horse race. You might get lucky and pick the winner, but there's also a good chance you'll lose your money.
That's a good analogy. And remember, while some investors are jumping on the Trump trade bandwagon, others are more cautious.
Especially on the global stage.
Especially on the global stage.
Yeah.
Yeah, you mentioned earlier that European markets haven't been as enthusiastic about Trump's win.
Right.
And that's largely due to concerns about his protectionist trade policies.
Right.
Europe is a major trading partner with the U.S., and they're worried about the potential for tariffs and trade wars, which could harm their economies.
Makes sense. No one wants to get caught in the crossfire of a trade war. And what about Asia? I imagine China is paying very close attention to this election.
Absolutely. China and the U.S. have had a rather tense trade relationship in recent years. And Chinese equities actually dipped in anticipation of potential new tariffs on U.S. imports from China under a Trump administration.
So while some sectors of the U.S. market are celebrating, there are definitely pockets of concern and uncertainty both domestically and internationally.
Yeah.
Exactly. It's important to remember that the market's reaction to Trump's victory is multifaceted. There are winners and losers, and the long-term consequences are still unfolding.
Well, speaking of long-term consequences, we need to circle back to those potential economic risks we touched on earlier. You mentioned concerns about Trump's policies, specifically the impact of tax cuts and increased spending on the national debt. Let's break that down a bit further. I mean, what does a bigger national debt actually mean for people like you and me?
That's a great question, and it's one that often gets overlooked in the excitement of market rallies. The truth is, a larger national debt can have very real consequences for everyday Americans.
Okay, I'm all ears. Break it down for me.
Well, for starters, a higher national debt often leads to higher interest rates. This is because lenders see the government as a riskier borrower when it's carrying a lot of debt.
Okay.
So they demand higher interest rates to compensate for that risk.
And how does that affect me personally?
Think about it this way. When interest rates rise, it becomes more expensive to borrow money. So if you're thinking about buying a house, getting a car loan, or even using a credit card, you'll end up paying more in interest.
Ah, I see. So that seemingly abstract concept of national debt actually trickles down and hits me right in the wallet.
Exactly. And it's not just about borrowing a higher national debt can also weaken the U.S. dollar. This is because when a country has a lot of debt, it can make its currency less attractive to foreign investors.
Okay. And how does a weaker dollar impact me?
A weaker dollar makes imported goods more expensive. So everything from the clothes you buy to the electronics you use could cost more. It can also make traveling abroad more expensive because your dollar won't go as far.
Wow, I never realized how interconnected all of this is. It's like a domino effect. One thing leads to another. And before you know it, something as seemingly distant as the national debt is impacting my daily life.
It is, and it's important to understand these connections because they help us make informed decisions, both as individuals and as a society.
So while the stock market might be cheering Trump's victory right now, there are legitimate concerns about the potential long-term economic ramifications of his policies.
Right, and those concerns are shared by many economists and financial experts. They worry that the short-term gains we're seeing in the market could be overshadowed by long-term economic instability if the national debt continues to grow unchecked.
And it's not just about economic instability. You mentioned earlier that a higher national debt can also crowd out other important government spending.
That's another significant concern when the government has to spend more money on interest payments on its debt. It has less money available to invest in other areas, like education infrastructure and scientific research.
So it's a trade-off. We might see a temporary boost in certain sectors of the economy, but at the expense of long-term investments that are crucial for our future prosperity.
Exactly, and that's why it's so important to have a balanced perspective and to consider both the short-term and long-term implications of these economic policies.
Well, you've definitely given me a lot to think about. I'm starting to see how this market reaction to Trump's victory is much more nuanced and complex than it initially appeared.
It always is, and that's what makes these deep dives so fascinating. We get to peel back the layers and explore the underlying forces at play.
And speaking of exploring, we haven't even touched on how global markets beyond Europe and Asia are reacting to this news.
That's a great point. But let's broaden our perspective and see how.
So we've covered Europe and Asia, but it feels like a huge chunk of the world is still left to explore.
Right.
I'm thinking about like South America, Africa, the Middle East. How are they reacting to Trump's return?
Well, it's a mixed bag, really.
Okay.
I mean, some countries see potential benefits,
Yeah.
especially those that rely heavily on trade with the U.S. and are hoping for, favorable deals under a Trump administration.
Okay.
But others are more wary, especially those that have maybe clashed with Trump's foreign policy
Right.
in the past.
Okay, so let's break it down by region. What are we seeing in South America?
Well, in Brazil, for example, which is a major agricultural exporter to the U.S., there's some cautious optimism. They're hoping for a continuation of the trade agreements that were favorable to them during Trump's first term.
But I'm guessing not everyone in the region shares that optimism.
Right. Countries like Venezuela,
Right.
which has been a target of U.S. sanctions under Trump, are likely viewing his return with more apprehension. They're bracing for potentially tougher economic and political pressure.
Makes sense. What about Africa? How's the continent reacting?
Well, it's a diverse landscape, of course,
Mm-hmm.
with each country having its own unique perspective.
Sure.
But In general, there's kind of a wait-and-see approach. I think many African nations are hoping for increased investment and trade opportunities from the U.S. But they're also concerned about potential shifts in U.S. foreign policy.
Towards the continent.
Towards the continent, yeah.
So a mix of hope and uncertainty, just like in many other parts of the world.
Exactly, and that uncertainty extends to the Middle East as well. Countries like Saudi Arabia, a close U.S. ally, they're likely relieved to see Trump back in office. But others, like Iran, which was directly targeted by Trump's policies during his first term, are likely anticipating a more confrontational relationship.
It's fascinating to see how this one election in the U.S. can send ripples across the entire globe, impacting economies and political relationships in such diverse ways.
It really highlights the interconnectedness of our world today. What happens in one country, especially a global power like the U.S., doesn't stay confined to its borders. It has implications far and wide.
And that brings us back to the core of what we're doing here, right? Trying to make sense of these complex events.
Oh, absolutely.
And understand how they impact all of us no matter where we live.
Exactly. And it's not about having all the answers, but it's about asking the right questions, challenging assumptions, seeking out diverse perspectives.
Well said. And as we wrap up this deep dive, I'm struck by the sheer amount of information we've unpacked. From the initial market euphoria to the potential economic risks, to the global reactions, it's been a whirlwind tour of the post-election landscape.
It has, and it's just the beginning. I mean, the true impact of Trump's victory will continue to unfold in the months and years to come.
So what's the key takeaway for our listeners? What's the one thing they should keep in mind as they navigate this new reality?
I think the most important thing is to stay informed, be critical thinkers, and to not get swept away by the hype, whether it's positive or negative.
Okay.
There's a lot of noise out there, a lot of opinions and predictions. But at the end of the day, it's about forming your own understanding based on reliable information and thoughtful analysis.
Great advice, and I would add, don't be afraid to ask questions to challenge conventional wisdom and to engage in thoughtful conversations with people who hold different viewpoints. I mean, that's how we learn and grow.
Absolutely, and that's what makes these deep dives so valuable. They provide a space for us to explore complex issues, share perspectives, and hopefully come away with a deeper understanding of the world around us.
Well, folks, there you have it. A deep dive into the surprising and at times perplexing market reactions to Trump's presidential victory. We've explored the initial euphoria, the specific Trump trades, the potential long-term economic risks, and the diverse global reactions, but this conversation is far from over. We encourage you to continue exploring, to stay informed, and to think critically about the forces shaping our world. Until next time, keep diving again at the